Well, thanks for tuning in to BloombergQuint Heads Up with me, Niraj Shah, and my colleague Ira Dugal. Good morning to all of you. And let's take stock of the top stories at this hour. And clearly, none more so than the FOMC decision. They have hiked rates by 25 bips. If that was not unexpected, what is unexpected is the hawkish tone from the Fed. And promptly, emerging market currencies and the equity markets have corrected.
There's news coming in on the commodity side as well. Higher inventories have pushed US crude prices down to 52-week lows.
And the regulatory action from RBI continues. They have initiated prompt corrective action or PCA against Central Bank of India.
Staying with stock-specific news, CLSA has put out an India strategy report. They're talking about the rural sector. M&M and ITC seem to be their top rural plays.
Small caps are the flavor of the season even now. Amongst the stocks today, Ginni Filaments and IndiTrade Capital could well see some action because maverick investor Purinju Veliath has checked into those counters. Okay, so
we've got a busy day. There's lots to talk about, but should we do the trade setup as always?
Yeah, we should. So, well, just a quick throwback to what happened in trade yesterday. Unexpected lines, very flat day for the market. So, ahead of the FOMC, we didn't anticipate too much of activity.
Sure.
And it takes some selling for the market to stay flat on a day when Reliance has gained 3.5%. It gained 3.5%, witnessed around 900,000 crores of buying, but I think negated by equal and opportunistic selling in ITC, HDFC, etc. So flat day of trade. Small caps were active. There were 8 out of the top 10 stocks had double-digit gains and strong gains on news. So that was pretty decent as well. The question that remains is what happens today. I think the SGX has already given its hand, down about close to 0.5%. Emerging market currencies have corrected. Emerging market stocks are likely to correct today because of the hawkish tone of FOMC, and we have a very special guest joining us in a minute from now to talk about that. But yeah, the markets will start off a bit lower today. Whether they will digest this slightly hawkish tone from the Fed remains to be seen. But yeah, all eyes out on emerging market currencies, the rupee on open today, and the emerging markets, or the Nifty when it starts off as well.
Quick word on what was happening in Reliance yesterday, just to get our viewers and readers up to speed.
Well, no specific news-based reason. I think a lot of times people cite these things to index management. You want the index to remain flat, so the blame game goes on to the 2 or 3 heavyweights, which are either up or down based on the day, quite frankly. No specific news-based action. But yeah, Reliance was up about 3.5% and nobody complained, at least the bulls didn't complain.
Okay. And the other sector that continues to be in the news, unfortunately or fortunately, is banking. I know you're tired of talking about banking, Niraj,
but it's just interesting.
What can we do? There's just too much news and too much happening. Let's just quickly run through this prompt corrective action and then we'll come to a bigger story. So I think Central Bank of India is where the RBI has initiated prompt corrective action. Niraj, these are circulars that will come out in dribs and drabs. But I think it was very clear that there will be a set of banks which will be under this prompt corrective action because the RBI had put out a matrix of sorts of what will lead to prompt corrective action. So a certain level of net NPAs, a certain level of return on equity, all of that was being factored into these prompt corrective actions. So central bank very squarely fit into that, and that's gone in. So that's one of the stocks. We'll come back to the other stocks in a bit, but we want to go back to the macro of Fed and what that means for the market.
Yeah, so it's an interesting move or interesting tone, and I think we have a very interesting guest with us as well, Hans Gotti Johnson right now. Needs no introduction, a fairly famous voice in India as well. But Hans, thanks so much for taking the time out and joining us today. Are you? My pleasure. Even if you were not, and all our BloombergQuint viewers would be delighted to have you this morning. If the decision of the Fed to hike rates was not a surprise, did the tone of the Fed surprise you? Especially because the data that came out just before the meeting did seem to suggest that CPI too had fallen, and therefore maybe the Fed will not be so hawkish. But hey, they stuck to the plan.
Well, it does not surprise me. As you mentioned a while ago, we think that the Fed will pause in September. The rate hike in June was a foregone conclusion, therefore not a surprise. But they may well pause in September because the economy has actually started to slow down quite substantially over the past 6 months. And a lot of this has to do with the fact that the Trump agenda, the tax reform, the infrastructure spending and so on, is being bogged down, is being delayed by events which are purely political, and therefore the decision makers, the long-term decision makers, are holding off, and that leads to slower growth. So we think that the Fed is starting to recognize it. They still look at the labor market and think the labor market is strong, but what we have also been saying is that inflation will come down, and I think the Fed is now starting to realize that inflation may be actually lower for longer and therefore they may have to be a little bit more dovish in the next few months.
Hans, this is Ira joining in as well. While I get that point, but the Fed yesterday, at least Janet Yellen didn't accept that these inflation numbers are pointing to a longer term trajectory which is lower than anticipated. She pretty much stuck to the fact that you will reach the 2% mark, that these are noisy numbers and one-offs need to be looked out, looked away from.
Well, we're very skeptical. We actually think that inflation for this cycle has peaked, and that inflation will go lower rather than higher, because there are secular forces which would indicate inflation lower for very much longer. One of them is demographics. I mean, we're talking about a baby boomer generation that is retiring. 1.5 million people every year turn 70 in the United States for the next 15 years, and that is deflationary. Older people spend less money, so the economy will slow down. And the other big secular force is automation, robotics. So you have a lot more in terms of downdraft on cap on labor costs, on wages, and that slows the economy as well. So these are secular trends which will become much more evident as we go along.
Hans, what does this do to flows and EMs? I mean, because of the tone, I think EM currencies, EM markets will start off slightly lower. But if indeed your thesis is that the Fed will not move in September and therefore probably move only in December if they move, does the market take it in its stride? Maybe this is a 1-2 day of a corrective action and then back to winning ways for the EMs?
We think so, because growth in emerging markets is picking up, whereas in the United States it's slowing. So you have the growth differential, which works in favor of emerging markets, and when you have that situation, emerging markets tend to get the inflows, and also financial markets tend to outperform.
Hans, we now have some sort of a process or number on the balance sheet normalization process that the Fed intends to follow. Are those numbers in line with what the market expected? Initial cap about 10 billion a month. There's a lot of fear that that balance sheet normalization, being a liquidity event, may have more bearing on fund flows than rate actions.
Well, it appears to me that they are trying to move in relatively small steps. So they will start small and just not reinvest maturing bonds. And of course, over time, this would step up. But of course, that will depend on the data. And again, if the economy is slowing, they left the door open to reverse that policy. So we'll see how that goes. It's at least we have a little bit of detail what they're intending to do, but the implementation will be a challenge.
Okay, Hans. Final question from my end at least. What about an India investor? Today, the markets will start off lower, maybe drift lower during the day. But are the events surrounding the Fed a thing of the past post today evening? And therefore, what would you do if you are investing in India or intending to invest in India?
Well, we're still bullish on India. I think India is not very much tied into the global picture, especially not what the Fed is doing. I mean, India is a big economy, and it's what we're looking at is the domestic demand there, and we think that will not cease to exist. So we think India will still be a market to be in, especially in relation to the emerging market space.
Hans, thank you so much for joining us. Appreciate your time. Have a good day ahead.
Thank you.
Thanks, Hans. Thanks for joining in. Ira, just before we move on to local cues, just a quick word on crude as well.
Before we move on and before you move on.
Before we move on as well. No, but interestingly, crude as well in yesterday's session fell quite a bit. I think on a closing basis, 52-week lows, and probably blame it on the fact that inventories didn't fall as much as anticipated, or the gasoline supplies have also increased now. So that's putting real pressure on crude. And for all the bulls who were saying at 55 that, hey, crude is headed to 65 or 70, I think a lot of people are saying there needs to be some bit of reality check. Now, frankly, sitting out here, at least I don't profess expertise on predicting what crude could do, but the recent data and the movement suggests that the chances are that
we'll have
$70 a barrel may not really be a possibility this year.
No, absolutely. This crude story has been surprising at every end, right? I mean, everybody thought that there would be some sort of normalization in crude. I mean, back home, that was one of the factors cited behind the relatively higher inflation forecasts, etc. But it hasn't played out that way. So crude has and probably continues to surprise.
Yeah, well, maybe good news. We don't mind, oil importing country. I'm glad the crude is at levels that it is.
No, absolutely.
But so you were talking about we having spoken about the RBI action, but a bigger macro story at hand.
Yes,
before we move to stocks.
yes, absolutely. Staying with banking. So our colleague in Delhi, Nikunj, had reported, based on his sources in the finance ministry, that there is actually now some sort of a roadmap emerging on how the government would like to see consolidation in the public sector bank space play out. Now they've been speaking about the need to consolidate. The finance minister has said they intend to consolidate, but now there are actual names starting to come out. So he's going to detail this, but there are this is a two-pronged strategy. One is to look at large banks which can become quote-unquote acquirer banks, and the other is to look at smaller regional consolidation to create perhaps regional powerhouses. But let's hear out what Nikunj has to say and what he reported yesterday.
The Finance Ministry has asked 4 big lenders to explore the possibility of merging with smaller banks in its move to consolidate the public sector banking space. These 4 large lenders include Punjab National Bank, Bank of Baroda, Bank of India and Canara Bank. These banks have already made a presentation before the government and have been asked to explore if they are in a position to merge with these smaller banks. They've been also asked to explore several issues relating to overlapping of bank branches, technical integration, and if there could be any anti-competition concerns that could emerge from a merger. Another interesting development here is some of the smaller banks which are financially sound are also in a dialogue for a possible merger. These banks include Karnataka-based Syndicate Bank and Vijaya Bank, which could be merged with Canara Bank. Another such merger, which is still in ideation phase, includes merging of Kolkata-based UCO Bank with Allahabad Bank.
Okay, thanks. So that's of course what Nikunj reported yesterday. But Ira, any thoughts?
No, let's chat about this, because I think I'm not sure how the market views this whole consolidation story. For instance, yesterday I know that Dena Bank, which was one of the reported banks that may be up for consolidation, suddenly spiked. Now there's an interesting play here. The banks that are going to get merged in, it may be seen as positive for them, but the banks that are going to be the acquirers may end up being on the back foot. We saw that happen with SBI, because when the SBI earnings came, the parent did very well, good set of numbers, but when the consolidated numbers were looked, it was a 3,000 crore loss, because the associates had tanked. So it could be a similar story playing out with these other banks if they do go ahead and consolidate.
Any usual suspects, the names out there, Ira?
So I think, as Nikunj said, the obvious larger ones, Bank of Baroda, Canara Bank, Bank of India, PNB, maybe are the guys who that the government has asked to consider some consolidation. But the more interesting play, and I think the smarter strategy, is what they're talking about: regional banks. So you get, say, a UCO Bank, Allahabad Bank, all these Calcutta-based banks together. I mean, currently all of them are in a mess, but you get them together and you start a clean out. Maybe you get a very eastern-focused bank which has a niche play in that area. Similarly for the southern-focused banks. So it's a thought. I think these are all thoughts. We don't know how quickly this will actually fructify, but good thoughts, interesting thoughts.
Interesting thoughts. I would just believe that don't go out and start trading these stocks immediately. I think there could be still some time before we eventually get some action, and therefore you being able to determine what will the impact be on some of these larger names or the usual suspects as well. But yeah, I think the way it is moving, it could be some very interesting banking movements that we could see over the course of the next 12 months. However, that's for the longer duration. For the shorter duration, I think a few stocks that we need to highlight today for the benefit of our viewers. Firstly, CLSA has come out with the strategy note, India strategy note. It's a small one, but they are talking about how farm loan waivers are becoming more the flavor of the season, so to say, and therefore the focus on some of the rural stocks or rural focused stocks. And as per them, while two-wheelers benefit, the top rural plays remain Mahindra and Mahindra and ITC, and I would say for obvious reasons you would have improved rural income, if not improved agri income. I'm making a clear distinction out there, and therefore M&M by virtue of its rural focus, tractors, so on and so forth, or ITC by virtue of the products that it caters to, remain the favorites for CLSA. Some others may have different favorites too, but I dare say two-wheelers could be a dark horse here, so that is something very interesting. I would want to quiz Zira on something else as well, but before that, just a quick word on the note that Goldman Sachs has come out, and they have downgraded Coal India, target price 225, and here's the interesting one. They are saying that because India is moving towards cleaner fuel, I believe the world by and large is, and India probably is making a move towards cleaner fuel. Companies like NTPC, for example, setting up their own coal resources, and power consumption or the thermal power consumption by and large coming off over the next 5 to 7 years, you probably see lower coal demand, so therefore lower coal offtake out of Coal India, and thus lower earnings over the next couple of years. Their target price is 225. That's not great news for a stock which has anyways lumbered on the upside and fallen very quickly on the downside. Goldman Sachs knows its onions. You can debate whether the target prices remain at those levels or not, because every sell side analyst has a different target price. But yeah, I would at least, I don't know about you, but I would at least agree with the reasoning out here.
Yeah,
I think we are probably moving towards such scenarios.
Sounds logical. I mean, the cleaner fuel movement will be a slow one.
Yeah.
It started, it will be a slow one. Nobody is expecting us to suddenly become all about green energy. But yeah, I mean, power demand has been subdued. If you link it to what's happening overall in the economy, the industrial cycle has not picked up. So, the demand from there will also remain sluggish. So some of their, I haven't read the report, but...
Yeah, but guess what? Coal India is a slow stock, Ira. So I think it's fine to have a slightly longer term view on this one. But just wondering, a lot of people would be wondering if this whole RBI corrective action, Central Bank of India now in the loop as well, does it have a stock impact there?
I don't know, Niraj. I mean, I would assume that this was anticipated because I think right when that new framework came out here on BloombergQuint, we said that there would be about 16 banks and we identified them which would fall under that prompt corrective action framework. The RBI has been doing it in, like I said, one at a time. So I'm assuming the market would have known, but still maybe that the news is now out and, it's on paper. Maybe there would be some reaction, but I don't think it was unanticipated in any way.
Okay, so not unanticipated, therefore again, don't go out and start trading central bank left, right, center. Maybe this was anticipated. The informed hands knew about this. May not be too much of a reaction. What could see some reaction? Small caps is the flavor I was mentioning at the start, that 8 out of the top 10 BSE small cap gainers had strong double-digit moves. So that part of the market continues to do well. The market breadth wasn't terrible yesterday, 1200 to 1400, so about 1:1. Even Stevens, and a couple of small caps that could be in focus today because of fund action. Typically, Purinju Veliat's name has a bit of an impact on the stock for that particular day. But Ginny Filaments, a stock that has been on a tear over the last 6 months, I think has moved up from some 25 to 50 odd, and now Purinju Veliat has checked in, probably see some more action today. But watch out, this could be an interesting mover. What could also be an interesting mover is IndiTrade Capital, wherein again they have bought in a very minute stake. Keep this in mind, 0.6%, doesn't move the needle too much. I think IndiTrade Capital is probably a 120 crore market cap company, maybe slightly more than that. My numbers could be here and there, but it is owned by, or at least managed by, a market veteran, Sudeep Bandyopadhyay. He is a regular guest and has been on our platform as well. They have started some debt financing options, so they're doing some interesting businesses. If it does react, we'll probably get in the management as well to talk about the business, so you can stay tuned for that as well. But yeah, these are a couple of small caps that could be active today, Ira.
Let's take a big leap from small caps into the big bad world of corporate credit, just to end off on a macro note. I don't know if you had a chance to read the Credit Suisse, they've been coming out. Yeah, so they come out these quarterly corporate health trackers. They've become, the last word in corporate credit quality. They came out with their latest report yesterday. You can go to BloombergQuint.com for the detailed findings because, it's a very large report. It needs to be read very carefully. But I want to run you through some of the basic points that come out. And one of the basic points that come out is that even in the fourth quarter of last year, there was no substantial improvement in corporate credit quality. Yes, there was some talk about earnings picking up, but the debt burden on some of these companies is so large that at an aggregate level, corporate credit quality indicators are not actually improving. So firms with an interest coverage ratio of less than 1, that means their earnings are not enough to cover their interest payments, is at 40%. That number has been more or less steady and it has not actually fallen. So that's a cause of worry that we aren't seeing an improvement in corporate credit quality. The sectors which we have talked about very often, the stress sectors are the same, but in some of these sectors, the level of stress is actually going up. And power is something that not enough people are paying attention to, because I think in power, stress levels are deteriorating. Credit Suisse says that power debt with interest coverage of less than 1 in their sample is at 70% now. In the telecom sector, companies with interest coverage less than 1 is at 57%. That story has been playing out. And in the steel sector, companies with interest coverage less than 1 is at 55%, even though the steel sector has been improving and earnings there have improved dramatically. So Niraj, I think the key takeaway is don't take your eyes off the ball in terms of corporate credit quality. It all comes home to roost on the banking sector, and we've been talking about that.
Yeah, and we
every
will keep
show.
on talking about that.
Niraj You're
not
like,
tired.
when can I stop talking about banking?
No, I mean, I would be very happy to talk about banking on every single day if there is a stock price movement. I'm just a slave of the market that way, Ira. But I think we all are, and in about 9 odd minutes, the markets, the pre-open session will start off. We'll probably start off on a tepid note, so don't expect great fireworks, at least at the start of the session today. But we will keep you updated about all that happens at 9:30 when our research team joins in to tell you about all that is moving in the markets, and you can log in for the same. But for now, thanks so much from Ira and me for watching Heads Up.